Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 31st, 2025, we're dissecting the QQQ, the Nasdaq 100 ETF, at a pivotal moment for the broader market. Recent news from sources like Yahoo Finance and CNBC highlight significant volatility. Just yesterday, the Dow, S&P 500, and Nasdaq Composite experienced a slip as the Federal Reserve held rates steady. However, in the last 24 hours, especially this morning, we've seen a shift. Nasdaq futures are jumping, driven by strong big tech earnings reports and optimism around new trade deals. The Nasdaq Composite Index itself, as reported by Nasdaq.com, stands at 21,129.67, showing a modest 0.15% gain, which reflects the mixed signals from recent trading sessions. This dynamic environment makes understanding the underlying chart data more crucial than ever. Let's begin our technical dive by examining the daily chart for QQQ, spanning from March 2024 to present. We can clearly see a robust long-term bullish trend, with QQQ consistently making higher highs and higher lows. Notice the significant support level that formed around the 460 to 470 range, which previously acted as resistance back in late 2024 before being decisively broken. The market has generally absorbed various economic uncertainties, including Fed decisions, and continued its ascent, largely due to the strong performance of technology companies within the Nasdaq 100. However, there have been periods of sharp corrections, such as the one we saw in early April 2025. This particular dip, which we'll zoom into, saw QQQ fall from around 476 down to 402 in just a few days, representing a severe correction of over 15%. Now, let's narrow our focus to that dramatic period in April 2025 on the daily chart. Starting from April 3rd, QQQ experienced a sharp sell-off, with high-volume candles showing significant bearish pressure. This intense volatility, marked by a 3.53% drop on April 4th followed by another massive 5.04% decline on April 8th, suggests market-wide fear or a major repricing event, likely tied to inflation concerns or a hawkish Fed outlook at the time. However, the strong bullish engulfing candle on April 9th, bouncing from the 415 level and surging over 12% on extremely high volume, signaled a powerful reversal and potential short-term capitulation. This demonstrates how critical volume and candlestick patterns are in identifying turning points, especially after rapid declines. The subsequent rally back towards previous highs confirms this was indeed a strong bounce from a key support area. Looking at the more recent daily price action in July 2025, QQQ had been trading around all-time highs, pushing past the 550 and even 560 levels. We see price reach up to 568.14 on July 28th. However, the last two daily candles show a slight pullback, with July 29th closing at 567.26 and July 30th closing slightly lower at 568.02. This confirms the slip in the Nasdaq mentioned in the news from 17 hours ago, indicating profit-taking or minor correction after hitting new peaks. The 565 area appears to be acting as immediate short-term support, with price bouncing from around there on July 29th. Conversely, resistance is evident at the July 28th high of 569.04 and the intraday highs seen around 570 to 572 today. Transitioning to the 1-hour chart provides a more granular view of the recent intraday movements. Focusing on the last few days, specifically from July 28th to July 30th, we can observe clearer consolidation patterns and smaller price swings. The price found support around 567.0 on July 28th before attempting to push higher. On July 29th, the QQQ experienced a more pronounced dip during the trading session, dropping from highs around 572.11 to lows near 566.53. This corresponds directly with news reports of Nasdaq slipping following the Fed's decision to hold rates. The strong volume accompanying this dip underscores significant selling pressure within that hour. Now, let's scrutinize the 15-minute chart for the most recent trading activity, specifically the closing hours of July 29th and July 30th. On July 29th, after the midday dip, QQQ showed a slight recovery attempt, but remained largely range-bound between 567 and 568.5, indicating cautious trading. The transition into July 30th saw QQQ initially consolidate, hovering around the 568 to 569 range for much of the morning. However, the latter half of the July 30th session saw increased volatility. We note a sharp drop in the 1847 Universal Time Coordinated Candle, pushing QQQ down to 566.06 from 569.56, again on significant volume. This retesting of recent lows highlights the ongoing bearish sentiment that characterized yesterday's close. But crucially, the final 15-minute candles of July 30th and early pre-market activity for July 31st show a strong rebound. The jump from 568.44 to 572.42 between 1947 Universal Time Coordinated and 2002 Universal Time Coordinated, accompanied by high volume, perfectly correlates with the breaking news from 21 minutes ago about Nasdaq futures jumping on big tech earnings. This swift reversal from intraday lows underscores the market's immediate positive reaction to the earnings news, pushing QQQ towards the 572 to 574 range. So, are we bullish or bearish on QQQ? In the short term, the market remains highly reactive to news. The immediate bounce on strong tech earnings suggests short-term bullish momentum, targeting resistance around 574 to 575. However, the general market sentiment from the Fed holding rates steady and recent broader market slips could cap gains. For the long term, QQQ's overall trend remains bullish, driven by innovation and growth in the tech sector, reinforced by Nasdaq's own initiatives like new solutions with AWS to enhance liquidity. Any dips toward the 565 or even 560 levels could present attractive entry points for long-term investors, as these appear to be strong support zones now. Conversely, if QQQ fails to hold above 565 and breaks lower, the next significant support would be found around the 555 to 556 level. A sustained break above 574 to 575, especially on strong volume, would indicate continued upward momentum and could propel QQQ towards new all-time highs. To recap, key price levels to watch are the immediate support at 565, then 560, and a stronger support around 555. On the upside, immediate resistance is around 570 to 572, with a target of 574 to 575 if bullish momentum continues. Unbiased prediction: QQQ has a moderate likelihood of continuing its climb towards 575 in the short term, given the positive reaction to big tech earnings. This likelihood is reinforced if major tech companies continue to post strong results and the broader market avoids significant negative catalysts. However, there's a low to moderate likelihood of a deeper pullback if the macroeconomic environment, particularly Fed policy or inflation data, turns more hawkish or leads to widespread risk-off sentiment. To reinforce a bullish outlook, watch for consistent trading above 570 on higher-than-average volume, signaling strong buyer conviction. For a bearish reinforcement, a break below 565 with increased selling volume would be a red flag. Keep an eye on upcoming economic data releases, particularly inflation reports and any further commentary from the Federal Reserve. Also, monitor the performance of key mega-cap tech stocks, as their earnings and forward guidance heavily influence QQQ's trajectory. That's all for today's deep dive on QQQ from Explain the Charts. Don't forget to like, share, and subscribe for more in-depth market analysis.